Can you invest in sports cards? If you want to find out reason number 2, stay tuned. Welcome back to EDI Sports Cards. So this video, we're going to go over reason number 2 on can you invest in sports cards. And if you haven't seen reason number 1 yet, go back to the playlist and watch reason number 1. So what is the second reason you can't invest in sports cards? And the reason is risk. Yes, R-I-S-K, risk. What is risk in investing? So when we think about investing in something, we have to actually do what's called a risk analysis. That means if you put money into something, what is the likelihood that you're going to lose every dollar? Now, what does risk mean? And so what I'm going to do is I'm going to walk through the different components of risk so that you understand why you can't invest in sports cards. Again, I know a lot of the comments but cards go up in value. Well, yeah, but they also go down in value. And what you need to understand is if you're going to put your money into something, you have to have some way of knowing whether or not they should go up or should go down. And that's where risk comes into play. So there's a couple different components of risk. And so let me go over the first component of risk, which is how much do you own? So one great example in comparison, so we have sports cards on one side, we have stocks on another side. If you were to invest your money in a stock, you only own a certain percentage of the company. So let's say it's Disney, or let's say it's Tesla, or let's say it's Apple. You buy a certain amount of shares and you own a small little percentage of that company. Now, we're not getting into whether or not that's a good idea or a bad idea. We're just talking about risk right now. So what happens is if Apple, Tesla, or Amazon stock goes down, you're only taking a risk of what you own, the percentage of the company you own, which in the grand scheme of things is not a lot of percentage. You don't own, you're not putting in billions of dollars to own the company. With a sports card, you are buying the entire card. You are owning 100% of the card, which means you take 100% of the risk of whether or not that card goes up, or more than likely that card goes down. And that's the problem on the first component, is there's too much risk with sports cards, because if that card goes down, you are out everything that you put in. You can't get anything back. You own 100% of that card, therefore you have 100% of risk. Now there's another component to risk that you have to understand in investing. That doesn't mean buying and selling cards. Remember, if you're a subscriber to this channel, I talk about buying, selling, and collecting. Those 3 things, because that's how you can enjoy this hobby, and that's how you probably won't lose your shirt if you spend money on cards, because you have to sell cards in order to not lose money. So if you buy, sell, you can make a profit. If you buy and hold, you're a collector. And if you hold more than 10,000 cards, you're, as I've said, you're a card hoarder. So let's get into the second component of risk, which you need to understand. So in investing, you need to know what the fundamentals are of the investment. If you were to buy a stock, if you were to buy a mutual fund, if you wanted to get into a REIT, if you wanted to invest your money in some kind of private equity, there is what's called a prospectus. And what the prospectus says is, what the investment is. What are you putting your money into? In addition, in the prospectus, they also have to tell you by law what are the risks that are associated with this investment. What are the downside to owning this investment? If you put your money in, what could possibly happen? You don't have that when you, again, buy sports cards, or as Jeff Wilson wants you to believe, invest in sports cards. So therefore, you take way too much risk with your money. Just going to put it out there. You don't know what are the potential risks with putting your money in a sports card. Now, I had some people give me, well, somebody sold the 1952 Mickey Mantle Topps card for $11 million. The Rosen card that famously was sold for $52,000. In fact, my father had an opportunity to buy that exact card because when I was a teenager, we actually talked to Mr. Rosen about that card specifically. Nothing to do with the card, it's just personal, and I just figured I would let you know. Now, obviously, we didn't buy the card because the amount of money he wanted for it was $52,000. So $52,000 for a 52 Mickey Mantle, and at the time, $52,000 for a baseball card was ridiculous. Somebody obviously bought it, and now, 40 years later, they sold it for $11 million. And a lot of people want to point to that as, well, see, you can invest in sports cards. No, you can't. That's not investing. So what that is let me explain. If you invest in something, there has to be some equal opportunity for the investment. If there's only one available, that's not an investment. That's called you're owning something there's one in the world. So there's only one of those Mickey Mantle cards. That's why it sold for $11 million. It's more like a piece of art, which also means that there's a lot of room for risk, because if you buy it for $11 million, you have to hope that there's someone else out there that will also pay $11 million, which is more than likely not going to happen. So whoever bought that card for $11 million, they're not going to get $11 million back. They might have to sell that for $10 million or $9 million. Again, they're probably going to lose money. So yes, the person that bought it for $52,000 made money, but the person that just bought it for $11 million probably didn't. So that's not an investment. That's just a collectible that just went up in value, got lucky, hit the curve. So for you as an individual retail collector, that's what I want to call you guys, because if you're not a dealer, you're a retail collector. And what you have to understand is that there's no way for you to know what the risk is in the market. Now, one of the biggest things that you should be aware of is the risk of no one wanting to buy cards. And that is a big risk. The fact that if you saw in the first video, there's no exchange, that's a problem. That means that you can't see what the market really is. You don't know how many people are actually buying cards on a daily basis, on a weekly basis, on a monthly basis. You don't know the volume, which means that you don't really know the health of the market. When you have an exchange, you actually can see historical data as to like the volume in the market. And there's actually data that shows that the lower the volume, the more volatility there is. Because again, there's not enough people in the system to buy what you own. And that's a big risk. And I think some of you have started to see this. Now, I've been in this hobby for 40 years. So I've seen 4 decades of change. So when I started was right before the bubble of the 80s, the mass producing, the junk wax era. It was right before that. Then I was a dealer through the junk wax era, and I stopped right at the end of the junk wax era. So then started keep collecting. So you got the 90s through 2000, and then 2000 through 2010, and then 2010 through 2020, right? Which is kind of the modern era, the ultra modern era that you're probably looking at going, okay, well, the market heated up in 2020 and 2021, and a lot of people came into the hobby. A lot of people started throwing money around, and every single card went up, like a lot. Now, all the cards are going down. Not a little bit, a lot. Michael Jordan rookie sold for, in 2020, $750,000. Now you can pick up that same PSA Michael Jordan for around $350,000. I don't know about you, but that's called a lot of risk. So if you bought it for $750,000, you just lost $500,000. I don't know how that's smart investing. That's called you made a mistake, a huge mistake, because you didn't understand what you were buying. And that's what I don't want any of you to do. That's why I want to do these videos, so that when you watch this channel, if you subscribe and you watch all of these videos, you will get the real answers that you're looking for. Can I invest in sports cards or not? And if I can't invest in sports cards, well, then what do I do? And the whole point of this video series is to say that what you can do are three things. You can buy, you can sell, and you can collect. That's it. That's all you can do. And if you do the buying and selling and treat it like a business, then there are business things that you need to do, and you have to follow business strategy. When you start to do investments, that's when you can get yourself into big trouble, because an investment is really sort of like, well, I hope this is going to work out. You can't do that with sports cards. Don't do that with sports cards. If you're buying a card going, I hope this goes up in the future, you're probably going to lose money. 9 out of 10 times, you're going to lose money. It's just the way it is. You really should be buying and trying to sell within a 3 to 12 month period. Because if you're in a business that sells products and your inventory doesn't sell after 12 months, you have to put it on clearance. You need to get rid of the stock, take whatever cash you can get back. If you can sell it for what you bought it for, great. Like, you don't need to make a profit on everything. As long as you do your numbers properly, if you're making a margin on all of your other stuff, then you can take hey, I'll take a 5% loss on this or a 10%. But some of you have actually bought cards that were not worth what you paid for them. They weren't even worth what you paid for them when you bought them. You overpaid even in the heated market, and therefore now you're really in trouble. So I have some people who make comments, what should I do now? And to be honest, I think you need to do a spreadsheet. I think you need to really look at, what did I pay for the card and what is it going for now? What are the recent sales? And I would look at the last 5 to 6 sales within the last 30 to 60 days. If there's not any sales if you only have 3 sales in the last 30 days of a card or the last 60 days of a card, you're in trouble. Especially if it's not a really rare card. Like if it's a 1-on-1, yeah, there's not going to be a lot of sales. If it's a 1 of 3, it's not going to be a lot of sales. A 1 of 10, not going to be a lot of sales. But if you're not dealing with that, if you're dealing with a card that's just like an autograph or, number to 99 or number to 499, and there are not enough sales within the last 60 days, your card is not worth as much as you think it is. In fact, it's probably worth half of what you think it is. So therefore, you really need to take a look at what you have and say, all right, I need to figure out, can I take this amount of money out of the card? Here, you take the card, I'll take the cash. And then what can you deploy that cash into that will actually make you more money? It's better off to take the cash back and make a profit on something else than hold on to a card with the hopes that it's going to go up in the future, because more than likely it's not. That's not the way the sports card hobby works. There's no fundamentals, there's nothing, right? Because there's no exchange. There's no way for you to track what a card is doing. So that's where the risk comes in, and there's too much risk in sports cards to actually make this a solid or good investment. Again, you can buy and sell cards because on the short term, you know what's happening. You can keep track of the market on a 30 to 60 basis, day period. You can track that. It's very difficult to know year over year what is happening with any individual card, which is why your risk goes through the roof if you try to invest in sports cards. So hopefully all of that makes sense. There's going to be more videos in this series, so if you want to find out reason number 3, go check out the playlist. Also, you should probably hit the subscribe button and the notification bell, because as those reason videos come out, you want to be alerted to them. So thank you for joining. Signing off.